Could relief from the pain of 2022 finally be here? Today I'm going to share my thoughts on why I think things are beginning to look bullish, some of the latest crypto headlines, and some personal advice for those investing in crypto. Let's get started. For today's video, I'm drinking an Irish coffee. As always, you can click the link in the corner of this video or in the description to find out how to make your own. Now, with crypto rallying this month, people are curious. Has the bull run officially started, or is this just a massive bear trap? Well, no one knows for sure. Most of crypto Twitter seems to believe it's the start of the bull run, with some notable exceptions. Looking at you, Capo of Crypto. But seriously, regardless of who's right or wrong, it doesn't matter because you can almost always tailor your data to fit into your narrative. One trader may see a bearish trend in his or her data, but another might see a bullish trend in their data. That is why I urge people to have a more holistic view of the market based on news updates and its roots in human emotion, rather than place too much value in technical analysis on the charts. However, I would be remiss to say that technical analysis has no bearing at all when it comes to investing in cryptocurrency or stocks. Now, despite crypto being more volatile than traditional markets, there are still some concepts that apply, as well as new ones like understanding the 4-year cycles of Bitcoin. More on that in a future video. Now, as for confirming if we are in the start of the bull market, all I am willing to say is that markets are irrational. They can sometimes do the opposite of what everyone expects. Prior to this year starting, the dominant narrative was that the woes of 2022 would carry on later into this year, and that we wouldn't see a bull run until perhaps the end of 2023 or even 2024. So I'll take what's happening as an unexpected surprise, but if you need more proof, let's take a look at some of the charts posted by some people on crypto Twitter. Looking at El Crypto Professor's chart, we can see that he is leaning towards this being the start of the bull run. Going next to Stock Money Lizard's chart, we see that he has Bitcoin following the pattern of Dow cycle theory, which hints at a potential bull run as well. Then we have the Real Plan C's chart, which focuses on the power law model, which has the price of Bitcoin going to be between $101,000 to $157,000 by the end of this bull run. Next, TA trader Alan remains bullish as well. Crypto Noob shares a similar sentiment. Titan of Crypto is ready for a ride to the upside. Plan B mentions how this is an early start to the bull run. Stock Money Lizards puts a new chart up, one that suggests Bitcoin at a price of $290,000 by September 23, 2025. TA trader Allen indicates the reversal from bearish to bullish. And lastly, we have the Capo of Crypto. While he is certainly respected in his views, some people have been bashing him and demanding that he admit he is wrong for sticking to his conviction for so long. The reasoning behind this is that markets go up and down, making a prediction is 50-50, and some feel that they can push the goalpost on their target in order to still be correct. Now, as the saying goes, a broken clock is right twice a day. If someone keeps saying the market will go down long enough, eventually the market will go down, and then they'll say they're right. And eventually if someone says that it's going to go up, eventually the market will go up, and that person can also claim they're right. But let me be clear and state that I'm in no way bashing Capo. I'm just simply stating the logic behind why those on Twitter have been bashing him. I have the utmost respect for Capo. He has been in this game far longer than I have, and I do admire his conviction to stick to what he says. Let us all remember that we need to be civil and not let greed rob us of our own humanity. It is okay to have differing perspectives and opinions. Now, looking at Capo's chart, we can see that he is insisting on Bitcoin crashing down to its real bottom price of $11,000 to $12,000. Well, that's it for the charts. But let's take a look at what else has been happening in the crypto world around us. Texas A&M becomes the latest university to offer a course on Bitcoin, proving that crypto is only becoming more and more mainstream. The course will be taught by Professor Korak Ray of the Mays Business School starting today on January 17th. Now, this is a good idea because the more we educate people about crypto, the easier it is to head towards mass adoption. Next up, we have big news for Amazon Web Services, who has recently announced a partnership with Ava Labs, the firm behind the crypto coin Avalanche. Disclosure, as I'm sure you all are aware, I do hold Avalanche. Now, Ava Labs aims to bring scalable blockchain solutions to enterprises and governments, potentially paving the way for retail to also jump into the world of decentralized finance. Now, this partnership is very crucial for blockchain technology, giving developers access to Avalanche's decentralized app ecosystem, which includes one-click node deployment. Now, for my last story, I'll leave you with a warning. The founders of the bankrupt cryptocurrency hedge fund, Three Arrows Capital, want to raise $25 million to start up a new crypto exchange called, get this, GTX. Now, the idea is that it is going to be marketed towards those who lost money with Sam Bankman-Fried's FTX exchange. GTX would supposedly allow people to buy and sell bankruptcy claims from failed crypto firms, in addition to using those claims as collateral. Turning bankruptcy claims into equity? What a load of nonsense. While the co-founders estimate about there's $20 billion in the crypto claims market, how the heck do they think they're going to be able to unlock those tied up funds from FTX and Celsius for immediate trading? Good luck with that. I wouldn't touch this one with a 10-foot pole. Guys, please stay far away from whatever exchange that Three Arrows Capital tries to launch. It can not only... This has disaster written all over it. I know they're going to probably name it something else. They said GTX is probably a placeholder name, but I would stay far away from this one. That's all the news I have, but if you've stuck around this far, you won't want to miss some of the important tips and advice I've got. Let's dive in. So it's no secret that last year was absolutely brutal for us crypto investors. However, if you're new to all this, you've probably learned your first lesson. Congratulations. And that is, winners are made in the bear market. Sure, it never feels good to buy some crypto and then watch it plummet immediately in value, but you have to look at it from this perspective. If you bought the coin at, let's say, $2, then why wouldn't you buy more when it's 50 cents? It's on a major discount, and when the next bull cycle comes along, it should return to $2 if it's a respectable project and stand the test of time to go even higher. Word to the wise, you stand to make more money in the bull market the more you buy in the bear market. Buying while prices are skyrocketing upwards is known as FOMO buying, FOMO, which means fear of missing out. This is when everyone around you has gotten wind of crypto taking off and making people rich, so everyone jumps in, which drives the price even higher. Don't be like the herd. When it comes to investing, you need to be mindful of human psychology. Warren Buffett once famously said, "Be fearful when others are greedy, and be greedy when others are fearful." But if you're confused by that, all he's saying is to buy when it looks like the world is ending and that the price of what you want to buy has fallen dramatically. People as a whole panic, and that can lead to irrational decision making. If you invest and the value of your portfolio starts dropping, why on earth would you sell it at a loss? If you are new to investing, it is easy to feel like you've lost money, but you technically haven't lost anything until you sell. Even if you are down on your initial investment, but believe in what you hold, there's little need to worry. In crypto, anything can happen, and that includes the value rising beyond the price you bought something at. It just takes patience. Now, despite crypto earning a reputation for helping people get rich quickly, this is a dangerous mindset to have. While I personally believe that crypto can bring wealth faster than traditional investing, most people don't realize that it still takes a great deal of patience. Given all the extra volatility the crypto market has, holding on for 2, 5, even 10 years is easier said than done. But with the crypto industry poised to reach over $10 trillion in value by 2030, trust me, you won't want to be selling anything. The best opportunities are ripe for the taking when everyone else overlooks them. Bitcoin is dead, they claim for the 30th time. Only criminals use crypto, they say. It's worthless magic internet money, not backed by anything, they argue. The prices of your favorite coins drop over 70%. You believe in the technology and you know that developments are being made consistently on your projects, but yet the price keeps dropping. Do you give up, claim defeat, and sell at a loss, never to enter the crypto market again? No. You double down, load up on some cash, and wait to strike. More often than not, the price will eventually stabilize after it's been trending down. This is a good time to make some buys. A concept you need to get familiar with is dollar cost averaging, or DCA for short. This is a tried and true strategy used by many investors, namely because it focuses on accumulating smartly and not timing the market, which is, by the way, almost impossible to do. The way to do it is buy at a certain frequency in fixed amounts regardless of the price. A good example of this would be purchasing $25 of Bitcoin once a week. Obviously, you can tweak the amount, frequency, and crypto choice to make it into a strategy that works for you. While this is a great strategy, sometimes money doesn't allow for this, and people may need to resort to buying infrequently. I'll admit that I myself am guilty of this, as I tend to wait for days, sometimes weeks, when the market is down in order to do most of my buying. This isn't necessarily a bad thing, but all that waiting around on the sidelines for lower prices can leave you with less crypto accumulated in the long term. Another personal tip of mine is that it's usually not the best idea to immediately buy something right when the price plummets. Give it some time, do some research, find out why the price dropped, and then act. Buying impulsively when the price drops is referred to as catching a falling knife, which, as you can expect, only causes more pain. Generally speaking, this happens because once the price drops sharply, it usually keeps falling for some time in the coming hours to days. Now, timing the market is never a good strategy, but I've found that buying when there's some confirmation of a reversal can help minimize risk. This strategy isn't guaranteed to work every time, mind you, but it can allow you to buy at a lower price before it bounces and increases again. Please keep in mind that there is a caveat to what I've said, essentially, in terms of buying and holding. If you are a different type of investor, if you are like a day trader, or if you're someone who has stop losses set in place in order to mitigate loss, so that way your portfolio doesn't bleed out, I am not and by no means advocating against that. This is for a different type of trading style that I'm talking about. I am more so speaking to buy and hold investors, people who invest in solid projects over a long period of time. If you're a short-term trader who trades based on short-term price action, then of course you're going to want to have stop losses. Of course you're going to want to do what you can to minimize your loss once you realize it's dropped beneath a certain point and that it's not going to be worth it to hold on to wait for it to recover. Well, that's all for this one, guys. I hope you learned something new today. Dom and I genuinely appreciate you spending some of your time with us today. We thank you, and feel free to let us know on how we can make coffee and cryptos better for you. We're always striving to improve. I'll catch you on the next one. See you around.